If you're drawing from multiple accounts in retirement, you're probably wondering how to save on taxes and make sure you're not overpaying. It's a tricky situation that many American retirees face, but there are a few strategies that can help you reduce that tax burden. Stick with me, and by the end of this video, you'll have some actionable tips you can use to keep more of your hard-earned money. Now, before we dive into the specifics, if you're serious about protecting your wealth, especially with the uncertainty surrounding the markets and inflation, click the first link in the description. Thousands of Americans are opening gold IRAs to safeguard their savings, and you'll want to check out the free guide that explains how to do it. Trust me, it's worth your time if you have $100K or more in your IRA or 401k, or even if you've accumulated 5 MA pluses in savings. So, let's talk about how to save on taxes when you're drawing from multiple accounts, starting with a foundational strategy, understanding your tax brackets. The way the IRS taxes retirement income depends on the type of account you withdraw from. For example, traditional IRAs and 401ks are taxed as ordinary income, which means that the more you withdraw, the higher your tax bill could be. But if you can strategically manage how much you take from each account, you can stay within a lower tax bracket, which means you'll pay less in taxes overall. One common mistake many retirees make is withdrawing too much from their taxable accounts at once. It's easy to forget that the IRS doesn't treat all income the same. If you take too much from your IRA or 401k, you might find yourself jumping into a higher tax bracket, which will leave you with less money in your pocket. This is where a gold IRA can really stand out. By diversifying your wealth into precious metals, you can potentially reduce taxable withdrawals. Unlike traditional retirement accounts, gold IRAs offer a hedge against inflation and can help you preserve wealth outside of the dollar-based system. It's a move that could be especially beneficial if you're withdrawing from multiple accounts. If you're pulling from both a traditional IRA and a gold IRA, you could potentially delay taxes longer or at least reduce your taxable income in a more efficient manner. Another important tip is to consider Roth IRAs. The beauty of Roth IRAs is that withdrawals are tax-free, provided you meet the requirements. If you've built up significant savings in a Roth IRA, you can withdraw without triggering a hefty tax bill. This is particularly valuable when drawing from multiple accounts because it allows you to offset any tax liabilities that would arise from withdrawing too much from taxable accounts. Now let's talk about the strategy of taking withdrawals in a way that minimizes taxes year over year. This is often referred to as tax-efficient withdrawal planning. If you have a variety of accounts, such as a Roth, traditional IRA, and taxable brokerage accounts, then you have a lot of flexibility in terms of which accounts to pull from. By managing these withdrawals based on the tax treatment of each account, you can spread your income over time, keeping you in a lower overall tax bracket. It's also critical to consider required minimum distributions, RMDs, that kick in at age 73. These mandatory withdrawals from your traditional IRA or 401k are taxed, so it's essential to plan ahead to avoid bumping yourself into a higher tax bracket when those RMDs start. One option that not everyone considers is rolling over part of your 401k or IRA into a gold IRA, as it might help you reduce the taxable income from RMDs and potentially gain protection from inflation. If you're not already taking advantage of tax-deferred accounts like a health savings account, HSA, or a tax-advantaged annuity, these could also be useful tools. But at the end of the day, the most powerful strategy for saving on taxes while drawing from multiple accounts is to have a well-thought-out plan that incorporates tax-efficient strategies, diversifies your investments, and takes into account both your current and future financial needs. And if you're serious about protecting your wealth and ensuring you keep more of your money, take a moment to click the first link in the description to get your free gold IRA guide. It's tailored for retirees who have 100K plus in their IRA or 401k, or even up to 5 MA plus in savings. Gold IRAs can give you a strategic edge when it comes to preserving and growing your wealth, even while managing your tax situation. So, if you're nearing retirement or already retired, now's the time to take action and make sure you're optimizing your tax strategy while protecting your wealth. Click the link and you'll have all the tools you need to make smart, informed decisions about your future. Thanks for watching, and I'll see you in the next video.